Good morning, everyone. So, I want to talk about something today which might offend the Bitcoin maxis. I consider myself a Bitcoin maxi, although I don't have 100% of my wealth in Bitcoin. But this might offend some people. Also, it's going to educate you if you're a normal human being and listening to the rhetoric of Bitcoin's going to demonetize gold, it's going to demonetize real estate, it's going to demonetize stocks, everything's going to go to zero, the real estate market value is going to go from 330 trillion down to zero, et cetera, et cetera. It's going to educate you on how this is actually going to play out. And I don't believe any of those things are going to happen. I think this is going to take a different path because of the system that we live in. So I want to go through exactly how that's going to work, at least from my perception. I'm going to put a link to the tweet that I wrote about this so you can see the numbers rather than just listening to me talk. This tweet's had more than, at this point, 100,000 views. So it's been, I would highly recommend going and checking this tweet out. So let's get to it. This is, by the way, more bullish than if it crashes everything else. Because if it crashes everything else, you've got systemic issues that you won't be able to survive. You won't be able to survive certain things if everything crashes. This is actually a very, very calm approach to it happening, right? I believe that gold's market cap will continue to grow. I believe that real estate's market cap will continue to grow, and I believe that the stock market's market cap will continue to grow. And the reason for that is that we live in an inflationary system. Basically, an inflationary system means that it needs debasement to continue moving forward. And I don't ever see a government handing over total control to an inflationary system. I don't see that happening, not in my lifetime, and probably not in my children or grandchildren's lifetime too. So the difference here is that as Bitcoin becomes, so you got to understand how everything works, right? You got to, the money gets printed, it then gets funneled into the money distributors, the money suppliers, let's call them. And then the money suppliers go ahead and hand that money out and distribute it around the market. And that's really what happens here. And it's a very, very simple process. And most people never ever get to understand or benefit from it because they're not in assets and they're not close to the money printer. And the reason why this works is that as that money gets funneled into assets, not into the real market, into the real people, inflation stays low. Now we can argue going into the future they might need to increase inflation, so more money will go to people. So we can argue about that on a different video. But right now, that's how the system has been working. The money gets printed, it goes into the money suppliers. The money suppliers funnel it into different assets. Then you create a tax system which incentivizes people to lock that money into assets, like the 1031 exchange in the USA. It incentivizes people to lock their money into real estate and nothing else. So the difference this time is that as Bitcoin becomes more prominent, a higher and higher percentage of that new money, which, by the way, will come because we live in an inflationary debasement-driven system, a higher percentage of that new money will find its way into Bitcoin and not real estate, stocks, bonds, et cetera, et cetera. So what does it mean? It means that while these other asset classes will be inflated like normal, their percentage increase that they've seen over the last 30 years, year on year, might decline. So let's say, $10 trillion is printed over the next 2 decades, right? I believe it's going to be much more than that. But just to be conservative for this video, because, everyone says I'm bullish as fuck. So let's just be conservative as fuck for one time, right? I wish conservatives would be conservative as fuck right now, but, I've got to do that job too. So right now, let's say, just for example's sake, that out of every dollar that's printed, 0.02% of it, 2 cents of it, goes into Bitcoin. this is quite interesting because, as the dollars are printed, they go to people that already have assets. And those people that already have assets pretty much want to stay comfortable unless they can sniff an opportunity. And Bitcoin is that opportunity that they can start sniffing at this point, especially with the Blackrock ETF coming out. So let's say, 99.98% goes elsewhere, but 0.02% goes into Bitcoin at this moment in time. In the future, you might have an argument where up to 5% could find its way into Bitcoin. So out of every dollar, out of every dollar printed, 5 cents might go into Bitcoin. This means that the other assets will still rise, but Bitcoin will rise faster, right? Because Bitcoin has finality of supply. If you don't have a Bitcoin, every single day as Bitcoin gets accumulated, you've got less and less chance of actually getting to a Bitcoin, which is why I'm trying to get people to understand that you need to get to a Bitcoin as fast as possible, because there is true finality of supply on this asset. It's not like real estate where you can just print more real estate. Now this means that the other assets are still going to rise, but Bitcoin's going to rise faster because Bitcoin has true finality of supply. As this percentage of capital increases, Bitcoin rises faster and faster, and these other assets continue to rise, but maybe just not as high, right? And by the way, this doesn't even include anything I'm about to say, doesn't even include any new capital from any assets that are sold and converted to Bitcoin. This doesn't include that. I'm just looking at new fresh printed money here. So this basically means that, let's say, new capital and its effects on real estate, right? Let's say that the current real estate's estimated growth is 10% a year. That 10% a year might dip, and it's a 30-year average. It might dip to 9.5% a year over the next decade, because people are saying, you know what, this new money I'm getting in, let me put, some of it into Bitcoin instead of real estate. So real estate still continues to go up, but instead of 10% a year, it goes up at 9.5% a year. And that number sounds very, very small to the average person. Now I'm going to dig into what it actually means on market cap for Bitcoin and what you might be missing here. It certainly sounds small, but as they say, small is powerful sometimes. So that 10%, right? Real estate's market value currently in the world is $330 trillion. So that 10%, as an example, that 10% a year growth is currently $33 trillion a year for real estate. 0.5%, which is that growth that we'll say will go away from real estate and go into Bitcoin, 0.5% of that 33 trillion is $165 billion a year. And if Bank of America's multiple is right, which I've been talking about since 2021, and people are just realizing that Bank of America put this research out there, if Bank of America's multiple is right and Bitcoin's supply continues to constrain as the halving approaches, the next halving approaches. This, by the way, is a shift over a decade. I'm not talking about next year, right? This is like the subtle shifts that can come in the market to boost Bitcoin's price up. So if they're right, if Bank of America is right, remember what they said was 118 to 1. For every dollar that goes into Bitcoin at the highest, most constrained part of the market, it's increasing the market cap by $118, which is huge. And you can go watch my other content on how that works, but that's what Bank of America said during the 2021 bull run. So just this one shift alone, right? $165 billion a year of growth coming away from a $33 trillion growth in real estate. How much is that? Look how tiny that amount is. $33 trillion real estate to compound 10% a year. And we get a simple 165 billies, 165 billion a year. That's nothing. Just that alone could add $19.4 trillion of market cap to Bitcoin every year. Because we're talking about CAGR now. We're talking about compounded annual growth rate, $19.4 trillion of market cap every year could be added onto Bitcoin just with 0.5% of the growth of real estate going, hey, you know what? All this money's come in. I'm going to put a little bit into Bitcoin because Blackrock, my Blackrock advisor called me and my Blackrock advisor said I should do this. And when Blackrock calls, I should probably do it because I'm probably going to make some money because they've probably found a fix somewhere. So just 0.5%, 165 billion a year. And this is not, again, I want to reiterate, I'm not saying this happens next year. I'm saying this happens as Bitcoin matures as an asset class. And by the way, that $19.4 trillion of market cap every year onto Bitcoin, do you know what that means for price of Bitcoin? That means adding $923,000 of price per Bitcoin every single year, just from 0.5% of real estate's compound annual growth rate shifting to Bitcoin. Think about that. Finality of supply is truly, truly magical, and you've never seen it before. And if you don't think that BlackRock is getting into the market right now to acquire this Bitcoin for it to be the next play where they shift 0.5% of growth from real estate, tiny 0.5%, just 0.5%, sir. Just nothing crazy. Adds $923,000 a year onto the per Bitcoin market price because the market cap goes up by $19.4 trillion. That's assuming that no other capital comes into Bitcoin. That's assuming no single asset is ever sold for Bitcoin. This is just assuming that money printing is going to lead to a CAGR for these assets. It's not including any other value creation, not including any other assets being sold, not including anything. That's $923,000 a year price appreciation onto Bitcoin just from real estate shifting 0.5% of its compound annual growth rate into Bitcoin. And that's real estate's compound annual growth rate today, not in 10 years. So I don't believe that Bitcoin has to collapse the entire world for it to be extremely, extremely successful. I don't believe that by any stretch of the imagination. I don't believe the US has to bend over to China. I don't believe any of that. I don't believe any of that. We could be sitting right here exactly as we're sitting. I'm sitting here drinking a damn hot cup of tea, and you are sitting here watching this video, and everything could just be this normal, and Bitcoin could be adding $1 million a year of value because there is so much capital out here. There is so much capital out here. That's why I firmly am trying to get people, I'm pleading with people to get to 1 Bitcoin. Because if you're not at 1 Bitcoin, you are going to miss out on an opportunity like you've never experienced before. And if you are, and the reason why I can say confidently like you've never experienced before, it's because the finality of supply of Bitcoin is truly magical, and it's never ever seen before. It's never ever been seen before. And not much capital has to move to actually make this asset grow like this. So, are you ready? Because this is not only like theoretical now. BlackRock's filed an application. This is getting ready to happen. So the question is, are you ready? Are you at 1 Bitcoin? And remember, there's only 3 rules to Bitcoin. And those 3 rules are, step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy. And do me a favor, please subscribe to the channel. And if you think this video could help open someone else's mind, please share it with them. I would really appreciate it. Thank you.